Hey guys, welcome to my channel. I hope all of you are having an amazing day. In today's video, we are going to look into RSI and how RSI is helpful while getting more confirmations or taking positions, right? So let's go and just check the basic formula or how RSI is getting plotted on our chart. Our RSI is calculated by this formula, which is 100 minus 100 divided by 1 minus RS, where RS is average of X number of days the market was up divided by average of X number of days the market was down. We don't have to calculate these formulas because most of the softwares or almost all the softwares now they chart or calculate this RSI and plot it on our chart. So on 0 to pi, if you want to add RSI indicator, you want to click on study, relative strength index, and these are the parameters, but these are like standard number of days, 70% as overbought and 30% as oversold market. So let's just keep them as it is for now, hit apply, and there you go, we have our RSI. So if you see here, this dotted line is basically 70% and this line right here is 30%. So whenever RSI is going above 70%, that means market is overbought. That means it's not a good time to buy a stock. That's how many traders use this as confirmation to sell a stock. And whenever RSI is around 30 or 40%, that means RSI is saying that it's a good time to buy a stock or market is oversold. Now there are a couple of things, bullish divergence and bearish divergence. So what I mean by bullish divergence is whenever RSI is making higher lows, that means that's a bullish divergence. So if you see market is going, so RSI is around 30 here and market is going up a little bit and then RSI came down and that's creating higher lows. Now market pushed up, RSI went up and then RSI came back down, but it's another higher low. So that particular trend is bearish, or sorry, bullish divergence. And if you see around here, RSI pushed up, market pushed up, and right here, the price of the stock is kind of sideways. But if you look at RSI, then what RSI is saying, there is no steam left into the market and it's a good time to sell the stock. So it's right around. So if you see here, RSI came down, tried to go up, but then again came down. So that means it created a lower high, lower high, lower high, lower high, and that's it. You know, these are like kind of confirmation saying there is no steam left into the market and it's most probably going to go down. And that's what happened if you see these candles. So that's how I use RSI indicator, guys. Whenever RSI is around 30, 40, it's probably means this is a good time to buy a stock. But if you have more confirmations that then yeah, of course, it's a good time to buy a stock. Always remember, none of the indicator is perfect. And if RSI is showing you higher lows, that means it's a bullish divergence and it's basically a good sign to buy a stock. Whenever RSI is creating lower highs, lower high, lower high, lower high, that means it's a bearish divergence and market is about to go down. And that's what exactly happened here. So that's how I use RSI indicator, guys. I hope this is useful and you have learned few things from this video. So that's all for now, guys. If you like this video, please hit that like button. If you don't want to miss out more content like this, please click on that subscribe button. And if you have any questions, comments, concerns, please do let me know in that comment section. Thank you.